Hello. Um, this is HRBC's show called Let's Talk. We're supposed to have the up and coming author Janelle Langford, but unfortunately, she was unable to make it. But don't worry, I have a new guest. He is going to talk to us about mortgages. And if you have questions, please feel free to ask. So stand by. He is popping up pretty soon. He's here, yay!
Hello.
Hi.
Just jumping right in. Okay, you're
Jump
already
right-
live.
We're already live.
Okay.
Scoot on back so we can get you on
Let's
this
get in
camera.
here. Okay.
Hey,
The podcast booth. How we doing today?
we're good. We're good.
Okay.
So, talk to us. Tell us about mortgages.
Mortgages in general.
In
What are you
general.
thinking of? Any questions do you have? You just
Oh.
came in earlier. Actually, we just originally got introduced just a few minutes ago, and she had a question about refinancing on Rocket Mortgage, or someone was
Yeah.
blowing you up at 8 a.m. What would you say?
8 a.m. Oh my gosh, I was still asleep. And they were like, do you want to refinance? I was like, it's 8 a.m. I don't
Like,
want
let
to
me
go
get
back to
some
sleep.
coffee first and wake up.
They just jumped right in. But I was curious because I heard that mortgage rates were higher now.
Well,
So
rates are going up, especially right now with inflation and everything we're dealing with, and then very volatile market, especially. Inflation's been the big issue this year,
Mhm.
so rates typically go up when inflation goes up, and that's what we're seeing. And then you have the war in the Ukraine right now. So initially, actually, that helped rates for the first week. But then the gas prices jumping up over the past couple weeks have hurt the market this week. Okay, so I think once gas prices stabilize,
Mhm.
you'll see the market improve a little bit there. So you have a little a fear of the gas prices increasing. And we were right at 40-year inflation highs before the war even began.
Hmm.
So those, the war issues, and that's just going to cause supply chain issues, gas price increases. It's just going to increase inflation. So, but still, we're talking about high rates, but relatively speaking, that's why I said it's relative to what you may have going on right now. I mean, still rates in the 4% range. So, historically speaking, still great, fantastic rates. And I really recommend taking advantage of those 4% rates, because in an inflationary market, you can see rates go up to 6-7% pretty quickly.
Hmm.
Okay, so still being at 4% is still a great rate historically.
Mhm.
So it's still a great time to get out there if you're a first-time home buyer or looking to upgrade your home, even refinance, get cash out. There's a lot of equity in homes right now because of the way values have just skyrocketed over the past 24 months. So really over the past 24 months. So if you're looking for cash out of your home, that could still definitely be a great option for you to refinance. Purchasing a home now before rates get even higher, which I would assume there'll be another point higher in the next year.
Mhm.
It's a great time to still do that stuff, even though there's a lot of uncertainty in the world right now.
Okay. So now tell me about you. How long have you been doing this and what's your company?
I'm Patrick Siksay. I'm with CBM Mortgage. I've been in the business, I've been saying 15 years for a few years now. I just don't want to age myself any more than that. I'm just like, we're going to stick at that age range for
We're
the
gonna stick at
next. Yeah, we're going to keep that right in that 15-year mark for about 10 years. Then we'll reevaluate. So I've been doing it for quite a while, more than 15 years. Okay, and I'm with CBM Mortgage, your hometown lender. We have offices all across Virginia. We're licensed in pretty much all up and down the Eastern Seaboard. So we do a lot of purchase base. We're purchase focused, but we do a lot of refinancing too. We specialize with our first time home buyers. We have great jumbo loans. We do it all.
Okay. So speaking of, you do it all. Talk about
They call me. Oh, they also in the streets they call me the Magic Man. So that's my nickname for the mortgage business.
For the mortgage
So
business.
we make the magic happen. There's tough deals and people that may not have a solution. We take the time and work with our clients. You may be ready to buy now, you may not be, but we're gonna be here for you to build a plan over the long term.
Okay. So when a person is coming and like say they refinance it. How do they? What advice would you give them, whether they determine to cash out or just get a lower interest rate?
Well, first of all, you want to have substantial equity in the home if you're looking to get cash out. Okay, so we still want you to have 20% equity in the home after you take the cash out. So that's the first situation. Do you have the equity in the home to be able to do that? Okay, so that's the first question you got to ask. If you're a veteran, you can go up to 90% with cash out. So we don't want you to use your home as an ATM. We want you to make a proper decision if it's for home improvements or a debt consolidation that you're doing one time type thing. But that's the problem that kind of got into us a problem back in 2006, 2007 when we had the market crash. People were just using their homes as ATMs. We'd refinance people every year for more cash. So we want to make sure we're doing that strategically, whether it's for home improvements or once it's more of a one-time thing that you do a cash out refinance. If you're dropping your interest rate just to save on your payment, interest rate's not everything. There's mortgage insurance that you pay on loans that you can drop off as you build equity in the home. You can transfer from like an FHA to conventional. A lot of people would do an FHA loan when they purchase a home, but as their credit improves and they gain equity in the home, we can get rid of that quite pricey FHA mortgage insurance and put you into a conventional loan with no mortgage insurance. So that's another way to do it, as well as just dropping your interest rate.
Okay.
Or some people may want to say, "Oh, I'm on a 30-year loan, but I'm making more money now. I want to stay here, and I want to do a 15-year mortgage, a smaller term to pay the loan off faster." Those are some of the different things that people look at.
Okay. Okay. My next question is, if you're a first-time home buyer, talk to me about that credit score. What do I need?
Well, minimum credit score is 620 for the first-time home buyer program. Okay. So 620 minimum credit score, 640 is better, but that's kind of the range you want to be in to starting out. And if you're not quite there, we work with you to build your credit to get it where it needs to be, especially as a first-time home buyer. It's all about education, teaching you what you need to do to make better spending habits, not just to qualify for a mortgage, but for the long term.
Okay.
For your own personal financial gain in credit-wise, budgeting-wise, saving, understanding all the benefits of home ownership. You got to understand, when you're a homeowner, you're paying money to the principal of your mortgage every month. So if you have a comparable payment to your rent, you're paying $300 to $400 to principal every month. That's like money going to a savings account. And as homes gain equity, that's the other. We all know homes gain equity, so you always think about that. Of course, you're going to gain equity over time, even as the market goes up and down. It still trends upward. You're also paying down your mortgage every month. You're putting more money into paying down the principal of your mortgage every month, as opposed to when you rent, that money is just going to your landlord's mortgage.
Yeah.
Tax benefits, you get tax write-offs. Okay. As a homeowner, another great benefit, and just having the pride of being a homeowner, a place to call your own, not having to worry about rent being hiked up, because have you heard what rents are these days? It's crazy, and people are living in homes and all of a sudden being charged, getting notifications that the rent's going up by $200, $500 just because of inflation and what's going on in the market. So, but if you're in your own home, you got that fixed rate mortgage, you don't have to worry about that being forced out by a greedy landlord.
Yeah. Okay. So you said that you will help them build their credit. How's that possible? What are you going to do?
Well, I mean, I'm not credit repair, but I can give you. I'm not a credit repair specialist. Don't claim to be.
Yeah.
But I do. I mean, I could, if you're in a range of 20 to 40 points of being at a 620 credit score, I could look at your credit and evaluate and say, hey, if you do X, Y, and Z, you'll get X number of points to help improve your credit score.
Okay.
That type of thing.
All righty. I think
and we do that free of charge, and that's just a service that we provide to our clients.
Oh, I like free. What else y'all give free?
We give advice free. We take out everything's free. We charge no lender fees, so all our services, there's no charge.
Oh, okay.
Absolutely.
Free is like my favorite word.
Okay.
All right. So, okay, we talked about first-time home buyers. We talked about refinances. What else do y'all do again? Purchases
in general, all residential loans. Purchase, refinance, first-time home buyers. We work with a lot of veterans. We specialize working with our veterans and love our active duty and retired community of veterans in this area, as well as jumbo loans. If you got somebody out there looking to buy a home in the Outer Banks as a second home, we got great jumbo loans for $1 million products as well. So we do a little bit of everything.
So what's a jumbo loan?
That's a loan over $650,000.
What do you got to do to get that?
You gotta have some money in the bank. You gotta have some higher credit scores, okay? And you gotta have typically that's after you've purchased a couple homes and now you're ready to make a move to, let's say you want to buy a rental property and rent it out in the summertime in the Outer Banks and still be able to use it for yourself as well, or investment property, things of that nature.
Okay. All right. So, I think that's all the questions.
Awesome. Well, I appreciate being invited into the podcast booth with you. It was great meeting you.
It's nice meeting you too, and I so appreciate you stopping by to explain it to us.
You're welcome. And I'm Patrick Siksay with CBM Mortgage. And if you ever have any needs, feel free to reach out to me. We appreciate your time.
I appreciate you, and I'll make sure I put your information on this.
Okay.
Just in case somebody wants to reach
I appreciate
out
that. All right. Have a blessed night. Good luck to you. Okay.
You too.
Thank you.
Bye.